Hello, dear students. So, in accounting, the very important concept that what we are going to discuss today is generally accepted accounting principles. So, GAAP. It actually comprises a set of accounting rules and procedures. So, where that is used in financial reporting practices. So, it has its own rules and procedures. Okay, so based on this GAAP guidelines, so compliant organizations to ensure the accuracy, consistency and transparency of their financial disclosures. See, there might not be any mistakes in preparing the financial reports. So this generally accepted accounting principles, basically it solves all the difficulties, and it guides the account managers to prepare a proper report, financial report. So let us discuss all the principles one by one. So first principle is principle of regularity. So this GAAP compliant accountants strictly adhere to established rules and regulations. See, regularity in the sense like that regular procedure of preparing the documents, reports based on the accounts, that should follow on continuous basis. Okay, so that should not be any irregularity. So that should done on a regular basis, day-to-day basis, monthly basis, yearly basis. Okay, so next is principle of consistency. So consistent standards are applied throughout the financial reporting process. So this standard process, consistency process, so it should be stable. It should not leave at any point. So based on the rules, procedures, guidelines given by the GAAP, so there should not be any one day we are preparing one report, okay, the next day that we should prepare in that same methodology what we prepared for the previous day. So that consistency should be there, that stable state that we should maintain, so that to get the clear data. And next is principle of sincerity. So this GAAP compliant accountants are committed to accuracy and impartiality. See, if at all only we have any guidelines, any principles, definitely we'll be having that sincerity that we should not make any mistakes inside this, since it is very sensitive part. See, accounts is very sensitive part. Even it is a 1 rupee, it matters a lot. And next is principle of permanence of methods. See, one method that I am preparing today, the same method that I should prepare for the next day. So different methods applicable to different time periods, that is not definitely not going to bring any good positive results. Okay, so that accuracy will be definitely missed out if different methods are following for different days. So next is principle of non-compensation. See, non-compensation, like all aspects of an organization's performance, so either it is positive or else negative, so everything that should be mentioned in that report. Okay, there should not be any drawbacks inside the report, so without no prospect of debt or compensation. So everything should be clear cut, that should be mentioned in the report, financial report. And next is what? Principle of prudence. So speculation does not influence the reporting of financial data. Speculation, the ups and downs. Okay, so today we are following and tomorrow that is not happening. That ups and downs, that fluctuation parts should not happen. So basically that will not definitely give any clear cut data for the finance manager, for the accounts manager. And next is what? Principle of continuity. So continuity, so asset valuations assume the organization's principle will continue. So that is what the concept, there is a concept called as going concern concept. In accounts, actually there is a concept called as going concern concept. So whatever things happen inside the company, definitely that business has to run, the business has to go. That is what principle of continuity. And next is what? Periodicity, and similarly materiality. See, based on the different periods, either it is fiscal quarters or fiscal years. Similarly, materiality, like reports fully, it should disclose entire details regarding in monetary form. So this is what materiality. So these are all the different principles of GAAP. Thank you all.